When Tesla announced that it had delivered 497,099 vehicles in the third quarter of 2025, the number immediately captured headlines. This wasn't just a statistic, it was the highest quarterly delivery figure in the company's history. For an automaker that has repeatedly defied skeptics and pushed the boundaries of electric vehicle EV adoption setting, a new delivery record is both a validation of its strategy and a symbol of how far the EV industry has come. But what makes this milestone even more intriguing is the paradox that lies beneath it. While deliveries soared to unprecedented levels, production actually fell by about 5% compared to the same quarter last year. Why would Tesla deliver more cars than ever, yet manufacture fewer? The answer lies in the company's complex balancing act. On one hand, meeting consumer demand and strengthening its market leadership, and on the other, temporarily pausing some operations to upgrade factories for the next generation of vehicles. To truly appreciate the significance of this record, we need to look at the broader context. In 2025, the EV industry is no longer a niche market. Governments around the world are tightening emission standards, offering incentives for clean cars, and in some cases, even setting deadlines for banning the sale of new internal combustion vehicles. Competitors such as BYD in China, Hyundai in Korea, and traditional giants like Toyota and Volkswagen have all ramped up their electric offerings. Yet despite this increasingly crowded field, Tesla continues to make headlines with its ability to scale deliveries to nearly 500,000 cars in just 3 months. The bulk of these sales come from Tesla's two most popular models, the Model 3 sedan and the Model Y crossover. These vehicles have become the backbone of Tesla's success, often ranking among the best-selling cars, not just EVs in major markets like the United States, Europe, and China. Their appeal lies in a combination of affordability by Tesla standards efficiency and the company's robust charging infrastructure. For many buyers, the Tesla brand is synonymous with innovation and reliability, making the choice easier even when cheaper alternatives exist. Still, the production slowdown points to a crucial chapter in Tesla's ongoing story. The company is in the midst of preparing its factories for new models and updated technologies. The long-anticipated Redwood, a $25,000 entry-level EV aimed at the mass market, is expected to be a game-changer. Meanwhile, the Cybercab, Tesla's fully autonomous ride-hailing vehicle with no steering wheel or pedals, is scheduled for production ramp-up in the near future. Retooling assembly lines now means Tesla is willing to accept short-term dips in output for the sake of long-term dominance. This raises several fascinating questions. Is Tesla's Q3 record a sign that it has already reached the peak of its delivery potential, or is it just a stepping stone toward an even bigger transformation? Can the company sustain this momentum while also navigating the risks of factory downtime, fierce competition, and shifting consumer preferences? And perhaps most importantly, what does this mean for the future of electric mobility as a whole? The Q3 2025 numbers are not just about Tesla. They reflect the entire EV market's trajectory. Analysts will likely interpret them as a signal of resilience, even with supply chain adjustments and factory transitions. Tesla managed to set a delivery record, but the implications extend further. For consumers, the surge in deliveries suggests that EVs are no longer rare. They are rapidly becoming mainstream. For competitors, the record serves as both a warning and a challenge. Keeping up with Tesla's scale is no easy feat. By the end of 2025, the EV landscape could look very different. With Redwood Cybercab and other models in the pipeline, Tesla is betting that its future lies not only in selling more cars, but in reshaping how people view mobility altogether. Whether this strategy succeeds will depend on how well the company manages transitions like the one we saw in Q3. So while 497,099 vehicles may be a number for the history books, it is also the start of a deeper conversation. It invites us to ask, is Tesla building towards a sustainable, long-term lead in the EV revolution, or are we witnessing a high point that could be difficult to repeat? The answer, as we'll explore throughout this script, will shape the future of not just one company, but the entire automotive industry. The announcement of 497,099 Tesla deliveries in Q3 2025 did not emerge in isolation. To fully understand its weight, we need to put the number into context. How it compares with Tesla's past performance, what external factors influenced production, and what insights analysts are drawing from it. According to Teslarati, this figure represents Tesla's highest quarterly delivery total ever recorded. For perspective, Tesla's Q2 2025 deliveries hovered around 439,000, while in Q3 2024, the company managed about 466,000. That means Q3 2025 marked not just year-over-year growth in deliveries, but also a significant sequential rise from earlier in the year. Clearly, Tesla was able to clear a backlog of vehicles to customers even as its factories were not running at maximum capacity. Here is where the paradox deepens. Business Insider reported that Tesla's actual production volume fell roughly 5% compared to the same period last year. The dip was largely attributed to temporary shutdowns at gigafactories in Shanghai, Berlin, and Texas, where Tesla paused output to retool assembly lines. These changes were not a sign of weakness, but preparation. The company was upgrading its production systems for upcoming models, such as the next-generation Roadster, the $25,000 Redwood compact EV, and the futuristic Cybercab. This dynamic highlights Tesla's unique operational flexibility. Most automakers struggle to balance new product rollouts with maintaining existing volume. A pause in production typically translates to fewer deliveries. Yet Tesla managed to deliver more cars than ever before, even while producing fewer, suggesting that the company drew from inventory buffers, streamlined logistics, and prioritized rapid handovers to customers. The role of Model 3 and Model Y. A significant part of the Q3 delivery success can be attributed to the enduring popularity of the Model 3 sedan and Model Y crossover. Together, they make up the overwhelming majority of Tesla's sales. Some estimates place them at nearly 85 to 90% of quarterly deliveries. Why do these models continue to dominate? First, they have achieved a level of recognition and trust that few EVs enjoy. The Model Y in particular has repeatedly ranked as one of the world's best-selling vehicles, EV or otherwise. Second, Tesla's strategy of continuously refining its software and hardware through over-the-air OTA updates gives these vehicles a sense of staying fresh long after purchase, a major differentiator compared to traditional automakers. But there's another factor at play: price. Over the last 2 years, Tesla has been aggressively adjusting its pricing strategy, slashing prices in key markets like the US, Europe, and China to stay competitive against rivals. For example, in early 2025, Tesla cut the price of the base Model Y in the US to just under $45,000 before incentives making it eligible for the federal EV tax credit. This brought the effective cost closer to that of a gasoline-powered SUV, dramatically boosting its appeal. Global market dynamics. Looking beyond Tesla's numbers, Reuters and Bloomberg have pointed out that global EV demand in 2025 continues to grow, but at a slower pace than in previous years. Rising interest rates and the winding down of government subsidies in some regions have cooled consumer enthusiasm slightly. Yet Tesla's record deliveries show that it has managed to buck the broader trend, largely thanks to its strong brand charging infrastructure and cost discipline. In China, Tesla remains a major player, though it faces stiff competition from BYD and other domestic brands. According to industry reports, BYD sold over 700,000 plug-in vehicles in Q3 2025, though not all were pure EVs. Many were plug-in hybrids. In Europe, Tesla's Berlin Gigafactory continues to feed demand for the Model Y, which has topped sales charts in markets like Norway, the Netherlands, and Germany. In the US, Tesla's dominance remains unmatched. The Model Y and Model 3 together account for more EV sales than most competitors combined. Production challenges and strategic choices. The 5% decline in production underscores a critical strategic decision. Tesla could have chosen to keep factories humming at full speed, maximizing short-term output. Instead, it opted to take the hit now in order to prepare for future scalability. Upgrades at Giga Texas, for example, are reportedly tied to the upcoming Cybercab, Tesla's fully autonomous ride-hailing vehicle. Similarly, retooling at Shanghai is aimed at supporting Redwood, the company's long-awaited affordable EV that could sell for around $25,000. This is reminiscent of Tesla's past struggles with production hell, particularly during the early years of the Model 3 rollout in 2017 to 2018. Back then, delays nearly sank the company's profitability. Today, however, Tesla is in a far stronger financial position with robust cash flow that allows it to invest in new lines without threatening its survival. Analyst perspectives. Market analysts have mixed interpretations of Tesla's Q3 performance. Some see the record deliveries as proof that Tesla remains the undisputed leader in EV adoption, capable of outpacing rivals even during factory transitions. Others caution that relying so heavily on the Model 3 and Model Y poses risks. If demand for these models softens, Tesla could face a sales cliff before new products like Redwood or Cybercab are ready to fill the gap. Still, the prevailing sentiment is one of cautious optimism. By delivering nearly 500,000 vehicles in one quarter, Tesla demonstrated not just operational resilience, but also its ability to navigate short-term pain for long-term gain. The temporary production slowdown may in fact set the stage for even more impressive results in 2026 and beyond. Tesla's achievement of delivering nearly 500,000 vehicles in the third quarter of 2025 only becomes more meaningful when viewed against the performance of its rivals. The global EV market is no longer a race. Tesla runs alone. It is a crowded field with challengers rising from every corner of the industry. To understand the weight of Tesla's record, it is essential to place it within this broader competitive landscape. Perhaps the most formidable rival is BYD, the Chinese automaker that has transformed itself into a global powerhouse. In Q3 2025, BYD sold over 700,000 plug-in vehicles, surpassing Tesla in raw volume. However, this figure includes not only fully electric cars, but also plug-in hybrids, which remain popular in China. Even so, BYD's strength in the domestic market, the largest for EVs worldwide, cannot be underestimated. Its strategy differs sharply from Tesla's. Instead of focusing on premium branding and advanced software, BYD leans on its expertise in battery production and affordability. Models like the Dolphin and the Seagull cost significantly less than Tesla's Model 3 or Model Y, allowing BYD to capture consumers who might never consider paying the higher price for a Tesla. Still, BYD has yet to replicate Tesla's global recognition. In Europe and North America, Tesla is a household name, while BYD remains a relative newcomer. The contest between the two companies is therefore not just about sales volume, but also about long-term influence and brand prestige. Toyota presents a different kind of challenge. As the world's largest automaker by overall volume, It long resisted the full shift to electric vehicles, instead doubling down on hybrids while expressing skepticism about battery technology. Yet Tesla's meteoric rise has forced a strategic rethink. By 2025, Toyota is fast-tracking plans for affordable EVs in the $25,000 to $30,000 range, precisely where Tesla's upcoming Redwood aims to dominate. Toyota's scale and distribution network dwarf Tesla's, giving it the ability to push new models into global markets with astonishing speed. But Toyota suffers from the perception of being late to the game. While Tesla has built its identity around being the pioneer of EV innovation, Toyota now finds itself playing catch-up. If it succeeds in bringing affordable, high-quality EVs to market, however, it could erode Tesla's dominance, particularly in the United States and Europe, where Toyota's reputation for reliability already commands loyalty. Tesla's American rivals. Ford and General Motors also add pressure. Ford's F-150 Lightning has carved out an important niche in the electric pickup market, leveraging the legacy of the F-Series as America's best-selling truck. GM, meanwhile, has pinned its hopes on the Ultium battery platform, which underpins vehicles ranging from the Chevrolet Blazer EV to the Cadillac Lyriq. Both companies face persistent challenges. Production delays, high costs, and a fragmented charging infrastructure have slowed adoption. While Tesla drivers benefit from the company's supercharger network, Ford and GM owners often rely on less reliable third-party stations, a disadvantage that directly affects consumer confidence. In raw numbers, neither Ford nor GM has approached Tesla's Q3 record, but their persistence signals that Tesla's supremacy in its home market will not go unchallenged. In Europe, the battle is being waged primarily with Volkswagen. With its vast portfolio of brands from VW to Audi to Porsche, the German giant has invested heavily in EVs, rolling out models like the ID.3 and the Porsche Taycan. Volkswagen enjoys the advantage of legacy in Europe, where its name has been trusted for decades. Yet Tesla's Berlin Gigafactory has tilted the balance. The Model Y has repeatedly topped European sales charts, in some cases outselling long-established domestic brands in their own markets. For Volkswagen, this is an urgent reminder that its traditional dominance is no guarantee of future relevance. It must accelerate battery supply, reduce costs, and deliver vehicles that excite customers in the same way Tesla does. The contrast between Tesla and its competitors reveals why the company continues to stand apart. Tesla's vehicles are not only cars, they are tied to a seamless ecosystem that includes the supercharger network, continuous software improvements delivered over the air, and a brand identity that embodies innovation and forward thinking. While competitors can offer similar features, piecemeal, few can match the full package. At the same time, Tesla is not without vulnerabilities. Its sales depend heavily on the Model 3 and Model Y, leaving it more exposed than rivals with diversified lineups. Recurring complaints about build quality and service add another layer of risk. And as the market shifts toward affordability, Tesla must prove that Redwood will deliver on its promise without sacrificing margins. The impact of Tesla's record quarter then extends beyond the company itself. BYD's rise shows the strength of China's domestic industry. Toyota's renewed focus signals that even the giants who once doubted EVs now see no alternative. Ford and GM highlight the struggle of legacy, American brands to reinvent themselves. Volkswagen's urgency underscores how European icons are scrambling to hold their ground. Tesla's Q3 numbers demonstrate that it is still ahead, but they also raise the question of how long that lead can last. As the wave of affordable EVs builds, the next few years will be decisive. Tesla has shown it can deliver record results even amid production slowdowns. But the true test will come when Redwood and Cybercab enter the market, colliding head-on with rivals' low-cost offerings. Whether Tesla can sustain its leadership will depend not just on its engineering and logistics, but on its ability to keep redefining what it means to drive an electric car. When was the last time you saw a car company deliver nearly 500,000 vehicles in just 3 months? For Tesla, the number 497,099 is not just a statistic. It is a story of resilience, ambition, and perhaps even audacity. In Q3 2025, Tesla didn't simply deliver cars, it delivered a message. The future of mobility is electric, and the company intends to remain its loudest voice. Imagine being a customer who placed an order for a Model Y earlier this year. You might have expected long delays as Tesla's factories temporarily slowed production for retooling. Yet by September, your vehicle arrives at your doorstep polished and ready. You become part of that record-setting number. For Tesla, every one of those 497,099 deliveries is more than a handover. It's another entry in the company's narrative of defying expectations. But how does Tesla keep achieving these feats in an industry where setbacks are common? Think of the traditional automakers. A production pause for them often means months of lost momentum. For Tesla, however, a slowdown in production was balanced by meticulous planning and logistics. Cars were drawn from inventory, deliveries were pushed forward, and the company's ability to adapt ensured that customers rarely noticed the disruption. The paradox is striking: fewer cars produced, yet more cars delivered than ever before. This raises an inevitable question: how long can Tesla sustain such momentum? Records are meant to be broken, but each new record becomes harder to surpass. Tesla has built its identity on growth curves that soar higher every year. At some point, the law of large numbers suggests those curves will flatten. And when that happens, what will define Tesla? Will it be its existing models still dominating global sales charts, or its new ventures, Redwood Cybercab, and beyond that, carry the torch into the next decade? Consider the Redwood Tesla's highly anticipated $25,000 EV. For years, critics have argued that Tesla's vehicles remain out of reach for the average buyer. Redwood promises to change that. If it delivers on price and performance, it could reshape the entire market. Yet, it also brings risk. Launching an affordable car at scale is no small feat, and Tesla's decision to pause production lines in Q3 suggests it is already preparing for the challenge. Would customers still flock to the brand if Redwood stumbled out of the gate, or would competitors seize the moment offering cheaper alternatives from BYD, Toyota, or Volkswagen? The Cybercab poses a different kind of question. By removing the steering wheel and pedals entirely, Tesla is making a bold bet on autonomy. Imagine stepping into a vehicle where you are not a driver, but simply a passenger. The prospect excites some and unsettles others. If successful, it could redefine urban mobility, putting Tesla not just in the car business, but in the transportation business. Yet this vision remains a gamble, reliant on regulatory approval, public trust, and flawless execution. All of this circles back to the symbolic power of Q3's record. The nearly 500,000 deliveries are impressive on their own, but their real significance lies in what they foreshadow. They show that Tesla can manage short-term turbulence while still achieving growth. They remind the world that even as competitors rise, Tesla remains the benchmark against which all others are measured. They also invite us to imagine what happens next if this is Tesla at a moment of partial slowdown. What might it achieve when its new factories and models are fully unleashed? For consumers, the story is equally compelling. Tesla vehicles are no longer just status symbols. They are increasingly practical choices. With expanding supercharger networks, lower prices in certain markets, and continuous software updates, buying a Tesla feels less like purchasing a car and more like joining an ecosystem. This emotional connection, where customers feel they are part of something bigger than themselves, is what competitors struggle to replicate. And it explains why Tesla's delivery numbers often carry more cultural weight than those of any other automaker. Still, no story is without tension. Critics warn that Tesla's dependence on the Model 3 and Model Y is unsustainable. Others point to quality control issues, service delays, and Elon Musk's polarizing public persona as potential risks to the brand. And yet, when the delivery figures are released, those concerns fade into the background. The numbers speak louder. So here we are looking at a milestone that is both extraordinary and fragile. Tesla has once again rewritten the rules of what is possible in the EV market. But will the next chapters of its story be as triumphant? Will Redwood truly democratize electric cars? Will Cybercab usher in a new era of autonomous transport? Or will these bold ventures test Tesla's limits in ways that numbers like 497,099 cannot conceal? One thing is certain: Tesla has mastered the art of keeping us watching. Every quarter becomes a cliffhanger. Every announcement a plot twist. And in Q3 2025, the company delivered a record that sets the stage for whatever comes next. Numbers make headlines, but stories make people remember. Tesla's record deliveries in Q3 2025, 497,099 cars handed over to customers tell one story through statistics. Yet the deeper narrative is woven from anecdotes, memories, and the voices of the people shaping this company. To fully appreciate what this milestone means, it helps to look at Tesla not only through the lens of numbers, but through the stories that surround it. Let's go back to 2017 when Tesla first launched the Model 3. Elon Musk famously described the period as production hell. At the time, Tesla struggled to build even a fraction of the cars it promised. Workers slept on factory floors, machinery broke down, and skeptics predicted bankruptcy. Fast forward 8 years, and Tesla is delivering nearly 500,000 cars in a single quarter. The contrast could not be sharper. That early struggle has now become part of Tesla lore, a reminder that the company has faced the abyss before and emerged stronger. Today's retooling pauses at gigafactories may be inconvenient, but compared to the chaos of the Model 3 ramp-up, they feel almost strategic, even routine. Consider also Musk's bold statements about the future. He once told investors that the humanoid robot Optimus could represent 80% of Tesla's long-term value. At first, the claim seemed almost laughable. How could robots, rather than cars, define Tesla's future? And yet, as production lines paused this year for upgrades, whispers circulated that part of the reason was to integrate new robotics and AI systems designed to make Tesla's factories more efficient. Whether Optimus eventually becomes a household product or not, the story illustrates Musk's knack for planting visionary seeds that shape how people interpret Tesla's present. When Tesla pauses production, it is not merely a setback, it is in the eyes of many a step towards something transformative. There are also stories from customers which add texture to Tesla's journey. A family in Germany who ordered a Model Y in the summer of 2025 expected delays given reports of factory retooling in Berlin. Instead, their delivery arrived earlier than scheduled. For them, being part of that 497,099 number was not about Tesla's global strategy. It was about a practical surprise, a new car in the driveway ahead of time, and the reassurance that they could plan autumn road trips without waiting. For Tesla, every delivery like this becomes a micro-story, reinforcing the brand's reliability and efficiency. And then there is the narrative of ambition embodied in projects like the Cybercab. Imagine telling someone in 2015 that within a decade, Tesla would be preparing to release a car without a steering wheel or pedals. The idea would have seemed like science fiction. Yet in 2025, the Cybercab is real enough to require factory retooling, regulatory conversations, and investor presentations. Whether or not it arrives on time, the mere act of preparing for it adds drama to Tesla's quarterly results. The record deliveries of Q3 coexist with this larger promise that Tesla is not content with simply selling cars. It wants to redefine what a car is. The Redwood project carries its own mythos. For years, Tesla enthusiasts and critics alike have demanded an affordable EV1 priced closer to the mainstream. The promise of a $25,000 Tesla has floated in the background of countless interviews, articles, and tweets. Now, as Tesla retools lines to prepare for Redwood, the story of that car is beginning to feel tangible. In some ways, the Redwood already exists, not yet on the roads, but in the imagination of drivers who dream of a Tesla that is truly within reach. When Redwood eventually arrives, its impact will be measured not only in units sold, but in the fulfillment of a narrative that began long before the first car rolls off the line. Even Wall Street's view of Tesla is tinged with storytelling. Analysts pore over spreadsheets, but they also trade on myths: the myth of Tesla as an unstoppable disruptor, the myth of Tesla as a risky bubble, the myth of Elon Musk as either genius or gambler. Each quarterly delivery report becomes a chapter in those ongoing debates. Q3 2025's record deliveries reinforce the myth of resilience. Despite factory slowdowns, despite critics, despite competitors, Tesla finds a way to keep growing. And yet, as with all great stories, there is tension. Critics point to Tesla's service issues, the quality complaints, or Musk's often polarizing social media presence. Some see the company's reliance on the Model 3 and Model Y as a weakness, a narrative thread that could unravel if demand softens before new models arrive. These counterpoints do not negate Tesla's achievements, but they complicate them, making the story more layered and human. After all, no compelling tale is without obstacles. What makes Tesla fascinating is not just the technology, but the way it captures imagination. Few automakers have fans who eagerly track production numbers as if they were box office receipts. Few companies can generate global headlines with a quarterly delivery update, and fewer still can turn operational challenges like pausing factories for upgrades into storylines that investors and customers interpret as signs of bold preparation rather than weakness. In Q3 2025, the story is this: Tesla reached a record, but not without paradox. It delivered more cars than ever, even as it produced fewer. It achieved short-term glory while laying the groundwork for long-term transformation. And behind every number are the stories of workers, customers, and visionaries shaping what Tesla is becoming. If history is any guide, Tesla's next chapters will be filled with the same mixture of triumphs, stumbles, and audacious promises. The 497,099 deliveries of Q3 are not just an endpoint. They are a marker in an unfolding saga, one that shows no signs of losing its grip on the world's imagination. Tesla's Q3 2025 performance, with 497,099 vehicles delivered, is more than a number. It is a statement about resilience, ambition, and the evolving future of mobility. This record did not come easily. Behind it lies a paradox: the company produced fewer cars than the same period last year, with output down about 5% due to retooling. And yet, despite that dip, it managed to hand over more vehicles than ever before. That balancing act tells us something important about Tesla. It has learned to turn short-term challenges into long-term positioning. The record itself is undeniably impressive. Nearly 500,000 vehicles in a single quarter cements Tesla's role as the global face of electric cars. It proves that demand remains robust for the Model 3 and Model Y vehicles that have already become icons of this decade. It also signals that Tesla has mastered the art of logistics, delivering at scale, even when production temporarily slows. But the real question is not about what Tesla has achieved, it is about what comes next. Looking ahead, Tesla stands at a crossroads. On one path lies Redwood, the long-promised affordable EV priced around $25,000. If Tesla succeeds in launching it at scale, Redwood could redefine accessibility in the EV market, pulling in millions of new customers who have admired Tesla from afar but found it financially out of reach. On another path lies the Cybercab, a bold leap into the world of autonomy. With no steering wheel or pedals, it embodies Tesla's belief that mobility itself is ready to be reinvented. Both projects carry enormous potential, but also enormous risk. Tesla's competitors are not standing still. BYD dominates China with high-volume affordable models. Toyota is preparing its own push into the entry-level EV market, leveraging its global scale. Ford, GM, and Volkswagen are fighting for relevance in their respective territories. In this competitive landscape, Tesla's Q3 record is a reminder that it still leads, but leadership is fragile. The real test will be whether Tesla can maintain momentum once Redwood and Cybercab arrive, while also defending its dominance against brands that now see EVs not as experiments, but as their future. For consumers, this milestone underscores that the EV transition is no longer hypothetical, it is happening now. Nearly 500,000 Teslas delivered in a quarter means EVs are no longer rare sightings. They are becoming part of everyday life. For investors, the record offers reassurance that Tesla can weather transitions. For competitors, it is a challenge to push harder. And for Tesla itself, it is both a victory lap and a reminder that expectations only grow higher. So, where does that leave us? In many ways, Tesla's Q3 2025 is a cliffhanger. It shows us a company capable of extraordinary scale, yet still in the midst of reinvention. It reminds us that the EV revolution is not just about cars, but about ideas, affordability, autonomy, and sustainability. It invites us to imagine a world where Redwood democratizes EV ownership and Cybercab changes how we move through cities. But it also asks us to consider, will Tesla's bold bets pay off? Or will its rivals seize the opportunity to close the gap? This is where you, the audience, come in. Tesla's story is not only written in boardrooms and factories, it is shaped by the choices of drivers, investors, and enthusiasts like you. So, let's open the conversation. Do you believe Tesla's record Q3 is a peak that will be hard to repeat, or a stepping stone toward an even bigger future? Will Redwood truly make EVs mainstream, or will Toyota and BYD beat Tesla at its own game? And are you excited or skeptical about a world where cars like the Cybercab no longer have steering wheels? Whatever your view, one thing is certain. Tesla has once again captured the world's attention. And if history is any guide, it will continue to do so quarter after quarter with numbers that spark debate and stories that fuel imagination. If you've enjoyed diving into this analysis, make sure to subscribe to our channel. We'll continue bringing you deep dives into the world of Tesla, the EV industry, and the future of transportation. Don't forget to leave a comment with your thoughts. We'd love to hear where you think Tesla is headed next. And if you want to support the channel, share this video with friends who are just as curious about the electric future. The road ahead is electrifying, and this record-breaking quarter is just the beginning. Stay with us as we follow Tesla's journey into tomorrow.